Good evening, class, and welcome to our MI class for today. The topic we are going to take is what we have been taking for the past two classes now. Okay, let me share my notes. So, it's the same topic we have been treating before. Let me get my charts and my participants so that I will know when you are offline and when you can't hear me. Okay? Hold on. Okay, so we are set now. So we've been discussing this topic called process costing. We finished part one last time when we talked about the process costing proper. We talked about normal loss. We talked about abnormal loss and abnormal gain. So today we'll be talking about process costing with closing work in progress. Then we'll be looking at process costing with opening work in progress using two methods, the weighted average cost method and the first in, first out called FIFO method. Then we'll look at work in progress and losses. Then we'll go to process costing, joint and byproducts. So these are some of the things we stand to gain today. So let me take you to where we are starting today, where part two we start. I think it's at page 13. Page 13 or so. Okay, it's not page 13. Perhaps it's page 18. Oh, it's not page 18. All right, it's page 21. Process costing part 2. So by the end of this part, you're going to see those items I outlined for you. So let's start with process costing with work in progress. Closing work in progress. Now we talk about sharing out process costs between finished goods and unfinished inventory. You know, all the while we've been doing process costing, we are talking about good output and abnormal output or loss. So we are talking about finished products. So it's either the finished product we had loss, normal loss, or we had abnormal loss. But today we'll be talking about unfinished products and finished products. So when manufacturing is a continuous process, you find out that in one period, there will be unfinished products, which we call work in progress at the end of the period, which will also become work in progress at the start of a period. So this section will be looking at work in progress at the end. The later we'll look at work in progress at the beginning. So let's look at some examples. All right. in work in progress, it means that some units have been started and finished in the year, which we call completed outputs, while others have been started but have not been finished. So that means there is a percentage that they have completed, and there are percentages that have not been completed. So it stands to reason that the cost or value of an unfinished unit will be less than the cost of the completed unit. Because if the completed units have been completed 100%, all cost has been applied. If a cost item has not been fully completed, that means all the costs associated with it have not fully been imputed. So we expect that it will be less than what has been fully completed. So the cost of the process will have to be shared between the finished output and the unfinished work in progress in a fair way. So normally we said before in our previous class that we allocate costs to output by calculating what we call cost per unit. Yes, you remember when we said expected units, we said total inputs costs divided by expected units for us to get our cost per unit, which we want, we use in allocating the cost. That process is still there. All right. Now, for us to do work in progress, we must learn what we call equivalent unit. What is an equivalent unit? An equivalent unit means how many work in progress, how many uncompleted item is equal to a complete item. It means equal to one finished unit of item. So we're saying that how many work in progress that have not been completed is equal to one full completed item. So look at an illustration. If we have 200 units of bread and we have only completed it 50%, so how many uncompleted bread of 50% completion is equal to how many of it is equal to complete units? How many complete units would that represent? That's what I mean. It represents 100 complete units. How do we know? Because 200 units have been completed only 50%, we will say 50% completion times 200, which will give you 100. So that means 200 units uncompleted bread that has been completed by 50% is equivalent to 100 complete bread. That's fair in the sense that we will assume that we have put in half of everything. It means we have put in half of material, we have put in half of labor. If we have used that half to do 100, we would have finished 100 by that time. So that is what it means. The time and energy we spend trying to do 200 and it remains would have been used to spend on 100. So you see, 50%, 200 units of bread is 100 complete units. And so 400 units of bread that are only 20% completed is just 80 loaves, because 400 multiplied by 20% will give you 80. So that's the idea we are going to be using in equivalent unit. So equivalent unit is how many uncompleted units will be equal to how many completed units. So that means that for every equivalent unit, you must know the percentage of completion. you must be able to measure the percentage of completion, because it is the percentage of completion that we are using to guide us in our equivalent unit. So costs are shared between the finished units and the inventory, between the finished units and the inventory, by calculating a cost per equivalent unit. We'll see how we calculate it. Now we have a complication. What is a complication? We've just done something that when we say a bread, 200 loaves of bread that is 50% completed is as good as 100 completed loaf of bread. Now the problem we have in this complication is that when we are calculating our process costs, we are using materials and labor. All right? So the problem here is material may have a different percentage of completion. Labor or conversion may also have a different level of completion, different from that of material. So if we have that, there will be a problem. So in that example we just gave you before, when we said 200 loaves of bread completed 50%, we didn't say anything, we just said 50%. This will mean that 50% of material, 50% of conversion. That is what it means for that to work. But let's assume that material has only 80% completion, while labor has only 50% completion. So there's going to be a problem. So we need to find equivalent units that are going to be fair, taking into account the completion of material and that of labor. All right, so we'll do what we call a three-stage calculation. What do we need to do when we are doing process costing and we know that there's going to be a work in progress? The three-stage calculation we are going to do is as follows. One, we will prepare a statement of equivalent units to calculate the equivalent units for each type of cost in the output from the process and for the closing work in progress. What did I mean is that you will get a statement of equivalent units showing you how many percentage of material has been completed, how many percentage of conversion has been completed. So that is the first thing. Then next, we'll prepare a statement of cost per equivalent unit for each type of cost. We'll do that, you see that. Then the third one is we will prepare a statement to calculate the cost of finished output and closing work in progress from the statement of from the statement of equivalent units and statement of cost by equivalent unit. So the third step is to calculate cost of finished output using the two statements we've prepared. See an example here. We say the following information relates to a production process X. Look at the input quantities in material. Okay, we didn't say material. This is the input quantities is 4,000 units. Of course, it should be material. Now, completed output is 3,500 units. And that means closing work in progress is 500. So it means we put in 400, 35 has been completed, and 500 is remaining completed. Oh. Now we are told that all the direct materials are added at the beginning of the process. What does that mean? It means that material is 100% completed. Closing inventory of 500 is therefore 100% complete for materials, because all the materials were added. It's just like bread. When you are doing bread, all the materials would have been mixed. So the work in progress will contain 100% for materials. But they said it's only 40% complete for conversion, which is making sense, because if a particular stage has not been reached, you will not get that conversion for that stage. So it depends on which stage the product is. So the labor and other overheads will be determined by where the stage of the product is. So we are told here that it's only 40% complete for conversion. Then we are told that excuse me, sorry. We are told that the cost that we are incurred in the period. Look at the direct material. The direct material is 24,000. The direct labor is, or conversion, is 7,400. And we are told to prepare the equivalent units and the work in process account. So let's see it on page 23, how this thing is going to be solved. All right, look at the solution. Now we are told that out of the 4,000 that was input, we're supposed to get out 4,000, right? But only 3,500 has been completed. So you see it here, finished output 3,500. And we are told that the remaining 500 is closing work in progress. So you see it, closing work in progress. Material. So look at material alone is 500. Okay? We are told that the finished product would have been 100% complete for material. 100% complete for labor. So if it is 100% complete for material, that means, is it Naira? I don't think it's Naira. If this is 100% complete, just a moment. So this should be units. This should be units, not Naira. So if it is 100% complete, that means 100% of 3,500 is 3,500. Complete for labor and conversion, all that. If it is 100%, it will be 3,500, 3,500. So you see, this one is like that. Now let's see the work in progress. We were told that this 500 units that is work in progress, for material alone, it was 100% complete because material all were put at the beginning. Excuse me. All were put at the beginning of the process. So it means material is going to be 500. But if we look at conversion, they say it's only 40% complete. 40% is what you put here, 40%. When you multiply 40% by 500, you are getting 200. So what do? we'll add across down. So here is total units is 4,000. In terms of material, the 4,000 unit is complete in material, while for labor, we are only having 3,700 units complete in labor. So that's our equivalent unit. The next one is statement of evaluation. Now we are told that total cost, that is the process cost, we are told that direct material is 24,000 and conversion is 7,400. So these are 24,000 here and this is the 7,400. Now we are told what is the equivalent unit in terms of material. Is this 4,000? You bring it here. In terms of conversion, is it 3,007? So if this is the cost incurred on material and this is the equivalent units of materials produced, it means when you divide, you are getting 6, and here you are getting 2. When you are looking at of labor, you are getting 2. So it means that our equivalent cost, our cost per equivalent unit is 6 naira for material, 2 naira for conversion. So that's the second thing. The third thing is to prepare your statement of evaluation. So you see that the finished goods, what do you do to the finished goods? Anyone that is finished, you will be using both to be finished for both material and labor. So you see, finished goods was 3,500. So what it means is that if you finished 3,500 equivalent, finished output 3,500, that will mean that you have to multiply it by that of material and that of labor. You add them together. But some can say they do it separately, 35 times 6, 35 times 2. You will get the same 28,000. Then when it gets to the closing work in progress, which is 500, and we were told that material was 500, while labor equivalent is 200. So all you need to do is, for material is 500 multiplied by the rate for material. Labor is 200 multiplied by the rate for labor. When you multiply them, you have these figures here, 3,400. So when you add them together, you have 3,400. So your equivalent, your labor costs or your conversion cost is 3,000. 3,400, sorry. Now, we are told that we have to put them in the process account. It means that this left-hand side is the inputs, while the right-hand side is the output, the cost we incur in buying the direct material. Direct material, we said, is 4,000 inputs, and it was 24,000. Conversion cost, we have nothing, but we have 7,400. So when you add here, it is 4,000. This is 31,400. So we will go to finished goods. We see it was 3,500, while closing work in progress is 500. And we have seen that we have our cost 28,000 here, finished goods, and our work in progress, we saw it as 34,100. So when we add across, we are having the same figures as above. Just give me a moment. Give me a moment. All right, I'm back now. I'm back. Okay, so we see that our input is equal to our output, and we've seen how we've shared the cost to finish goods and to work in progress, closing work in progress. So you see, you have to do your 3 steps. First step is your equivalent costs to equivalent units. So you need to know what is the equivalent units. How many uncompleted units is equal to how many completed units in terms of material and conversion. Then when you do that, the next thing is to put costs per unit. So you need to say, okay, those costs you incur as inputs, use it to divide these equivalent units for you to know how many is the cost per unit. So now this equivalent unit now has now replaced what we usually use as expected units. So this equivalent unit has now replaced that. So that's why we see it being divided. So we're having a cost for material, a cost for labor. Then you come again, the third one is to now apply this cost into the actual thing here. To apply this cost into the actual finished goods and into the actual work in progress. We only derive per unit. So we are now applying it to how many that was produced as finished and how many was in work in progress for us to get the total costs. Then we will now put them in perspective into this account. So you see this 28,000 here is here because it relates to 3,005. Then the remaining 500 is 500 and 200. In the eyes of work in progress in material and labor, it is 500 and 200, which gives us 34. But we know that it is 500 units that is still remaining as work in progress. Okay, we go to, that was for closing work in progress. So let's look at opening work in progress. You'll be wondering, closing work in progress is supposed to be opening work in progress in the next period. So why are we considering it? Opening work in progress add another level of complexity. When there is opening work in progress, there are 2 types of costs on the debit side of the account. These are the costs that were incurred last period, which forms the opening work in progress. It was the closing work in progress in last period, brought forward as opening work in progress in the new period. And the costs that we incur in the current period. So we see that there are 2 costs. Now the issue is whether these 2 costs should be treated together or should they be treated separately. This question is addressed in the accounting policy that is adopted for opening work in progress. So whether we treat them together or we treat them separately depends on the policy we adopt. Now there are 2 policies here. One of them is weighted cost method and another one is first in, first out method. In the weighted cost method, all costs on the debit side are treated in the same way. The first in, first out method allocates the costs in the opening work in progress to the finished goods and then spend the remaining costs elsewhere. We are going to look at these 2 methods. So the first one we are looking at now is the opening work in progress weighted average method. What is the underlying principle here? When the weighted average cost method is used, the assumption is that all units produced during the period and all the units of closing inventory should be valued at the same cost per equivalent unit for materials and the same cost per equivalent unit for conversion. An average cost per equivalent unit is calculated for all units of output. They say an average cost per equivalent unit is calculated for all units of output and closing stock. So they're using one cost, unlike when we are using two costs. This includes the cost that we are partly converted at the beginning of the period and which were therefore valued as closing stock at the end of the previous period. So the calculation here involves a three-stage calculation. All right, look at the three-stage here. The costs are worked out in a similar way as if where we had no work in progress at the beginning. So, but that's the same kind of thing we're going to do here. First, we are going to prepare a statement of equivalent units for finished output and for closing work in progress, like we did before. Then we are also going to calculate, we are going to find statements of cost per equivalent unit. Cost per equivalent unit is important. So we calculate the cost per equivalent unit for direct material and the cost per equivalent unit for conversion costs. However, we should remember to include the cost of the opening work in progress. So when we are calculating equivalent cost, we should remember to include the cost of opening work in progress. The material cost of the opening work in progress should be included in the total direct material cost, and the conversion cost in the opening work in progress should be added to the conversion cost for the period. That's it. Should include it. The previous period material cost is still hanging, we include it in this period. So you have to calculate a separate cost per equivalent unit for material and for labor. This is because the equivalent unit of closing inventory will be different for material and for labor costs. Then you still do your statement of evaluation. Having calculated the statement of evaluated equivalent unit and cost per equivalent unit, you have to calculate your equivalent statement of equivalation. Then you now prepare your process account. So let's look at another example, the weighted average method. Look at process X. We had opening inventory, 3,000 units. We are the opening inventory. And look at the information about it. We are told that material was 100% completed and it cost us 12,600. Conversion cost was 30% completed and it was 970. So we're just assuming that this was from last period being brought to this period. That's why it is called opening period. Fine. We now have during the month or during the period, anyone, we had more input materials. The quantity there is 7,000 units. So more materials are coming in for the period. Then we have completed output. Completed output. So you see there's a work in progress, 3,000 units. We now have 7,000 more units introduced. Now look at what was the output, 8,000 units. Not only do we have 8,000 units, okay, so let me explain again before we go to the further. We have 3,000 units of opening inventory, right? We now have 7,000 units input. Everything should have been 10,000, right? Now out of that 10,000, 8,000 is completed, while 2,000 is closing work in progress. which is 100% complete for material and 60% complete for labor or conversion. Now, all the direct materials are added to the production at the beginning of the process, we were told. Closing inventory of 500 units. 500 units is therefore 100% complete for materials, but only 60% complete for conversion. Is it 500 units that we are closing inventory? Closing inventory, I thought is 2,000 units. Okay. They said the cost incurred were 28,000 in materials. That is all the cost that was incurred in buying the materials for the month. These 7,000 quantities, all the cost incurred, all the conversion costs were all 17,430. We're asked to prepare the process cost account. So what do we do? Let me go to page 25 here. So what do we do? We'll look at the first one is equivalent, statement of equivalent units. So you see, we need to put our output first. It's output we are doing. When we are doing equivalent unit, it's our output that we are talking about. Each time we are doing equivalent unit, is the output, not the input, is the output. So what is our output? Our output, we had two things in output. We have completed and we have closing work in progress. That's what we are going to do. Completed is the finished. We are told that the completed output is 8,000 and work in progress is 2,000. That is what you can see here. Now, when it comes to completed, 100% is complete, 100% for materials is complete, 100% for conversion. So that's why 100% multiplied by 8,000 is 8,000, 8,000. But when it comes to closing work in progress, it is 100% complete in material, but 60% in conversion. So where's my cursor again? So this is 100% multiplied by 2,000, give you 2,000. 60% multiplied by 2,000 will give you 1,200. So you see, when you add these two, you are still getting your 10,000 units. That is the total input, getting them for material, because material is 100% complete. But when you are looking at conversion, because it is just 60%, the equivalent cost is, the equivalent unit is like saying 9,200 complete for labor. Now that you've done the equivalent unit, the next thing to do is statement of equivalent, of cost per equivalent unit. So what do? We look at we are still looking at, when we are looking at statement of cost per equivalent unit, we are now looking at the inputs. Remember, the equivalent unit, the first statement relates to the output. The second statement relates to the input. So how much did we put in for cost of opening work in progress? Let me see. Cost of opening work in progress is 12,600 here. We were told material 12,600, conversion 970. So you see, conversion is 970. Now, cost for the period. Cost for the period. We were told that for the period, Material cost was 28. Conversion cost was 17,430. That is what we used. So material cost, work in progress, opening work in progress, and completed cost, and the cost for the period. This is the opening work in progress, this is the cost for the period. You add them together, you have 40, 60, 600. The same thing, you add these two together, you get 18,400. And what do? We now divide by these figures here. We said these figures now represent our equivalent, our expected units. So we now divide by these figures. This is 10,000 divided by 9,200. What you have is 4 naira and 6 kobo. And here is 2 naira per unit. Now the third thing to do is to apply it. How do we apply? Statement of evaluation. Our cost of finished goods, we are told that our finished goods were 8,000. It means that to have material costs and labor costs add together, you multiply, you have your 48,480. Now, these finished goods, this is closing work in progress. Material costs, you know, this is for material, this is for material. You multiply by 2,000. Then conversion costs, you know, this is for only conversion. You multiply, you have 24. So what you do is that when you add these two together, you have 10,520. That is your cost per equivalent unit. Cost per equivalent unit. So this is cost for finished goods. This is cost of the work in progress per equivalent unit. So cost. Now look at what we're going to do now. The process costing, opening work in progress. We are told before it was 3,000, which comprises of this 12, 6, and 970, which is 13,570, which is this one here. Direct material, we are told our input was 7,000 units, so it is material. Direct material should be 28,000. Yes, that's it. Conversion cost is this figure, but no material or unit attached to it. So that's this. You add them up. So here is 10,000, here is 59,000. So you go to the finished goods. We were told that 8,000 is the completed and 2,000 is the work in progress. You put them like that. So what is the completed finished goods? Is this one here. I will calculate it here, put it straight. Work in progress, you put it straight. You add, and that's it. Okay. Weighted average cost method summary. Look at the summary. The weighted average cost method for process costing with opening work in progress can be summarized as follows. We have to all outputs and closing inventory are valued at the same per equivalent unit. All outputs and closing inventory are, so look at what they mean here. Can you see that this is output, finished output, and work in progress? Everything give you this 10,000 and 92. When we were calculating our equivalent cost, we used the 10,000 and we used the 90. So everything was giving us the same equivalent value. Now, cost of opening inventory plus cost in the period, which will give us total costs. That's one. Then units of closing inventory plus units of output in the period equals to total equivalent units. So you see something, cost of opening inventory, that's the one in the left hand, plus the cost in the period will give you total cost. Then the one in the right hand, units. So the one in the left hand is cost, the one in the right hand is units of closing inventory, and units produced in the period will give us total equivalent units. So we are now saying that cost per equivalent unit is total cost divided by total equivalent units. So you can see the summary here. The cost, these are the ones in the left hand side. You add them, you have total cost of material, total cost of conversion. Then the ones on the left hand side is units. Units of material, equivalent units of labor. So the two are total equivalent units. So cost per equivalent unit is this total cost divided by this total equivalent units. So that's the summary for that. We go to opening work in progress FIFO method. Now in FIFO method, it is based on the assumption that the opening work in progress at the beginning of the month will be the first units that is going to be completed. The cost of these units is their value at the beginning of the period. What I mean is that once we have work in progress at the end of the period, going to the new period, we will have to complete these first. So we are saying that the cost of these units at their value at the beginning plus the period plus the cost to complete them in the current period. That is how we value them. So it is necessary to calculate the number of equivalent units of work done in the period, and it consists of the following: the equivalent units of direct material and conversion costs required to complete the opening work in progress. Anyway, let's go to the three-stage calculation and see how it is being done. The three-stage calculation with FIFO is similar to the ones we've been doing. You have to calculate the finished cost of opening work in progress, which is the sum of the work in progress value at the start of the period plus the cost in the current period to complete them. Plus, we'll now do the cost of finished output started as well as finished in the period. So let's see the difference. Look at this same example. This is 3,000 opening work in progress, 100% complete in material. Therefore, 0% is needed in the period. All material has been completed, right? Conversion cost in the work in progress is 30% complete. Therefore, 70% will be needed in the period. Okay? During the month, we have 7,000 units input, 8,000 completed units, that's output. Work in progress, 100% complete for direct material and 60% complete for conversion. This is the same question. all the direct materials are added to the production at the beginning of the process. Closing inventory of 500. Why did I keep writing 500? Is 2000. Is therefore 100% complete for material, but only 60% complete for conversion. So the costs incurred in the period, we are told, is still the same thing, material and conversion. So how do we do this? First, we have to prepare statements of equivalent units. When we say equivalent units, we are using the ones at the outputs. The outputs. So we look at output that was started last period, which is now the opening work in progress. What was started last period but not complete is the opening work in progress. So it means that according to the question here, sorry, what page? It's page 28, so let me go to 27. According to this question here, 3,000 units were completed. So that's it here. So if 3,000 units were, work in progress, not completed. Now, how many material has been used in it? 100% material is used. That means that 0% is needed in this new period to complete it. That's why you're saying 0% needed to complete. And when I said 30% has been completed, so we need 70 to complete. So that's why you're saying 70 here. So when we now multiply 0% by 3,000, it means equivalent cost of material needed to complete is 0. 70% of 3,000 is 2,100. So 2,100 units is needed to 2,100 is what is needed to finish the opening work in progress in terms of conversion. Now, look at what was started in the period and finished in the period. So what we now mean is this. If we are told that this is 8,000 units, right? If this is 8,000 units, you will now have to put your 8,000 units here, finished, 8,000 units. So if 8,000 has finished and this is 3,000 that was started in the period, that means it is 5,000 that is credited for this period. It means that out of this 8,000 that we said that completed output is 8,000, it is assumed that this 3,000 that was started in the last period and not completed was first finished. It's formed part of the 8,000. And new 5,000 that started in this period and finished in this period. So we have dealt with this 3,000. Is this 5,000 that we are left to deal with? It means that it is complete 100% for material. So we'll now say 100% of material, 5,000, 5,000. For labor or conversion, since it is finished 100%, still 5,000. So what we now mean is that for this 8,000 that is being completed, it means nil plus 5,000, which is 5,000, 2,1 plus 5,000, which is 7,1. That is what it translates to. Now look at the closing work in progress that we were given. 2,000 units. So what do? 2,000 units, we were told that it is 100% complete for material and 60% complete in conversion. So we take it 100% complete in material, 60% complete in labor. So the only difference between what we are doing now, okay, we'll talk at it at the end. So 100% is 2,000, 60% is 1,2. So when you add these two together, you're having 7,000. Add these two together, you're having 8,300. So these are the figures we are going to be using. The difference between this and the one we used before was that in the opening work in progress here, we use the percentage that has been completed already to evaluate it. But in the case of this one, we use the percentage left to be done, the percentage yet undone to evaluate. In the second one, we use the whole 8,000 here, but in here, we are deducting this 3,000 from the 8,000 to say 5,000. So that's the difference. So look at your equivalent cost per equivalent unit. What you do, this is the input, the left-hand side. We have the 28,000 and the 17,430. So now, equivalent unit, you're using this 7,000 you got here, and you're using this 8,3. So your cost now is 4,000 and 4 naira and 21. So you are going to apply it in the same normal way. Statement of valuation. Cost of finished goods in the period. So look at it now. In the period, 8,000. You know, cost of goods finished in the period is 8,000. You know that 3,000 was from last period that did not end, which we completed in this period. So when we evaluate it for material, we used opening work in progress 3,000 units. And what was the cost there for material? The whole cost here is 13,570. Okay, this is the whole cost. It cost us. This is what it cost us last period, and this is what it cost us this period to complete. So this was the cost that was carried in from last period, and this is the cost from this period. How do we know? Because we looked at it here. It is 2,100 that was to be used to complete it. So 2,100 multiplied by only conversion costs will give me 4410. So when we add these two together, we're having 17,980. Now, we now look at the period, the work we started and we finished in this period. We are told is 5,000 because everything is 8,000. This 5,000 would have needed material and would have needed labor. You add them together and you multiply by 5,000. You have 30,500. When you add these two together, this is the cost of goods finished in the period. Now coming to closing work in progress, 2,000 is yet to be finished. So we are still using the same 4 naira for material, the whole 2,000 units, because we said it's 100%, 2,000 and 1,2. So that one is 1,200 multiplied by 21. So when you add these two, this is the cost per equivalent unit. So you will now apply them in your process costing. Opening work in progress, 13,500 for 3,000 units. So look at what we do now. That 3,000 units that we brought, we bring it in and we said, okay, the value is this figure. as brought. Look at your direct material cost, 7,000. This is exactly what you spent. Conversion cost is exactly what you spent. So it doesn't change. But now, when you are doing your finished product, the other side, you are not taking in what you've just calculated. The finished goods is 8,000 that you finished. And look at the equivalent cost, 48. Good. Now then, the closing work in progress is 2,000, and this is the value here. When you add them together, you are getting the same thing. Now look at what they said here. They said, note that if you compare this example using FIFO with the previous example using weighted average, you see that the cost of finished outputs and the value of the closing work in progress is the same in each case. This is a coincidence because we normally expect them to be different because of different valuation method. But in this example, it is coincidence. So now look at the FIFO method summary. First in, first out. It means what came in first in that period is work in progress. So that work in progress will have to be finished first before new one will be started this period and finished. And there are some that will not be finished, which will become our closing work in progress. So look at how it is. Now they said the cost of opening units completed in the current period is calculated separately from the units that are started and finished at the period. So if you look at it, cost incurred in the current period, cost incurred in the current period, that's current period total cost, equivalent units of work in the current period. It is consisting of equivalent units to complete the opening work in progress. Then what we started and finished. Then what is the closing work in progress? So we add them up. That gives us what we call our total equivalent work units in this period. So we will now say this cost divided by. So just study this format. It is the same thing. Just a moment. Okay. All right, so we've done that. So if you look at the summary of the evaluation of the FIFO method, we have opening work in progress. It's just the same, almost the same thing that we are saying here. Let's go to work in progress and losses. Let's talk about work in progress and losses. Now, all the while we have been doing work in progress, opening work in progress, closing work in progress, and finished goods. We've not taken into cognizance the loss. Question might combine work in progress and losses. How do we deal with them? We said that when the losses are not recoverable, it is measured as 0. Or when it is recoverable, we will recognize their scrap value. So when the question requires the calculation of cost per unit by components of cost in the question arises as to what cost the expected scrap value should be set off against. After all value of the scrapped units would lay partly in the material cost, but also partly in the conversion cost. So part of the scrap value, we'll get it from material, get some part in labor or conversion. So we have to look for a method that does not require complication so that we can apply a fair way to apportion losses, value for losses, and value for the completed unit. Okay, let's see an example here. Closing work in progress and losses. Now look at this example. Closing work in progress and loss. We have input quantity is 4,000. Normal loss, which have a scrap value of 1 naira per unit. It means this is 10% of the input. What does that tell us? It is 400 units that would have been normally lost. And we have a recovery value of 1 naira, which is 400 naira. That's fine. Completed output is 3,000. And closing work in progress is 500. So what does that mean? It means that there is 100 units that has not been accounted for. Let's see how it's going to come out. All the materials, all the direct materials are added to the production at the beginning of the process. So that means the work in progress of 500 will have 100% material in it. Inspection of units occur when they are 50% complete. Inspection of units occur when they are 50% complete. Note that this must relate to conversion as they are 100% complete for material. What they are telling us that this 50% complete is for conversion, because when they come for inspection, as at the time they come for inspection to check all of these things, 50% has been completed. So that's for labor, because for material, since we put all of them at the beginning of the period, 100% is complete. Now they said closing inventory of 500 units is therefore 100% complete for material, but they said it's 60% complete for conversion. Okay, so let's take it like that. The cost for the period where direct material is 24,000, conversion cost is 7,000. They said it is useful to construct an extra working with these questions to show their physical number of units. So let's see how it is being done. This process costing is one of the major questions that will come up in the exam. Now, opening work in progress, we are not giving, so it's 0. Input, we are told it is 4,000 units of input. Okay, so that means, okay, let me go the same way and open. So I'll be going from back and forth here. Okay, that means opening plus input, 4,000 is the total number of units you expect. That is the highest number of units that is possible. And you said your normal loss is 10% of input, 400. So that means if you're expecting 400 to loss, that means 4,000 minus 400. This 3,600, that is your expected good output. Okay, so this is what you're expecting. So what happened? The actual good output is 3,000. Then work in progress, closing work in progress is 500. So you see, 100 was not accounted for before I said it. So that is your abnormal loss, 100. So you've done that. The next thing to do is to calculate your closing work in progress and losses. How do we do that? We say equivalent of units. Statement of equivalent units, we said we use it for outputs. Finished output is 3,000. The question told us completed output 3,000. Work in progress is 500. Okay, so that's it. Abnormal loss was 100. Remember, we had our 100 abnormal loss. Fine. So what do we do? If you add all of them, is 3,600. That's beautiful. Now the finished goods is 100% complete for material and for labor. So it's obvious they are using, the method they are using is weighted average. That's the method they are using here. Now, closing work in progress, we have 500 units. And of course, it's 100% complete in material and 60% complete in labor. We are told that in the question. So 500 becomes 500, 500 here becomes 300. Now, abnormal loss, as at when it is coming for inspection, abnormal loss here was 100. 100% would have been complete, but they say 50% in labor or conversion costs. So that's why it is this. So when you add all these units and add all of this one, direct material is 36, conversion is 3,350. So you've done equivalent. Now we'll go to the statement of cost per equivalent. What do we do? Total costs. We are given this total cost. Direct material is 24, the round one is 7,004. These are what we see here. Now we're supposed to remove scrap value. Expected scrap value recovery of normal loss. You know it is 400 units multiplied by 1 naira is 400 naira. We're not going to apply it to conversion. It's only on material, because what are we selling? We are selling the units. So what are we selling? We are selling the material and not units. So when we look at our statement of cost per equivalent unit, we are looking at total cost we are giving 24,074. Expected scrap recovery of normal loss, which is 10% of 4,000, which is 400 at 1 naira each. We are recovering our material that was normally lost. This is the recovery value. So it's not conversion. So it doesn't have anything to do with conversion costs. Now, equivalent unit, when you now less it, you are having, for material, we are having 23,600. Conversion cost remains the same. Now, look at our equivalent unit. These last figures we got here is what we have here. You divided them, and your equivalent per cost per unit, cost per equivalent unit is 6.56 and 2.21. So you are going to apply them when you are using your statement of valuation. So note that the cost per unit above have been rounded to 2 decimal places. So this cost has been given to 2 decimal places. However, the calculations below are based on their unrounded figures. Because if we use these figures here, it will still further chop off certain things. So, but what we did here was we used, instead of writing 6.56, we're using 23,600 divided by 3,006. So this is exact value. So anything we'll get is what we are going to write here to the nearest whole number. All right, so cost of finished goods. We say it is 3,000 that was finished. This 6,560, you can still do it this way, or you can come here and use this figure to replace this, and use this figure here to replace this. So you add them together. When you do them, you add them together and multiply by 3,000. You have this figure. Then you go to closing cost of work in progress. Material is 500, of course, equivalent unit times the cost. Conversion is 300 units equivalent times the appropriate cost. You add the conversion units. These are the total for conversion. This is total for finished. This is total for conversion. Then you come for abnormal loss. We said material is 100 units, and you are multiplying it by this figure. Labor is, or conversion is 50 units, multiplied by labor figure. So you add, this is your equivalent cost. Then you go to the process account. You have 4,000 direct materials, the cost of material and labor. Of course, you have your finished goods, your normal loss, your abnormal loss, and your closing work in progress. Okay. The same way you do when you apply, when you are doing weighted average method. You know how weighted average method is, so I would like you to look at it and see how weighted average method was done. And the same thing with FIFO. So this is the same method we have been using. They now apply FIFO and weighted average. It means that they now used opening, they now deal with something with opening work in progress as well as closing work in progress. Like you can see in the process costing here, process account here, it has opening work in progress, it has closing work in progress. So you look at it there. So we want to go to something called process costing joint and byproducts. So what do we mean by joint and byproducts? In some process manufacturing system, two or more joint products are produced. Joint products are two or more products generated simultaneously by a single manufacturing process using common inputs and being substantially equal in value. They use a common input and being substantially equal in value. Until the joint products are produced in a manufacturing process, they cannot be distinguished from each other. The same input material and processing operations produces all the joint products together. Each joint product has a substantial sale value relative to each other joint product. A classic example of joint product is the refining of crude oil to produce a series of products like fuel oil, gasoline, kerosene. So as that, when they are crude oil, they are joint until when they now split off. Then you know domestic animals are grown for their food and their hides, and are turned, and their hides are turned into leather. So when they are alive, their flesh is still with them. So as at the time you are killing them and you are extracting the skin for hides into leather, and you are taking the other one for food, that is where you are splitting them off. Now look at apportioning common processing costs between joint products. Now the cost of the common process that produces the joint cost are called common costs. In order to calculate a cost for each joint product, these common costs must be shared, or we say can be apportioned between the joint product. You know, all the costs that is being incurred just before splitting is called the common cost. So the common cost of the process must be apportioned between the joint products in a fair basis, in much the same way that overhead are apportioned between cost centers. So you use an appropriate basis of apportionment to apportion the common cost. Now, there are three methods that we can use in this. One of them is unit basis. So common costs are apportioned on the basis of the total number of units produced. So total number of units produced. Wow. Kende, please, can you off your video? Total number of units produced is what is used to apportion the costs. So the costs per unit is the same for all joint products. So what it means is this. If we have a joint product and when we split the product, maybe we have 3 different products. Product A has 3 units. Product B has 2 units. Product C has 5 units. What do? We simply say the whole cost that is common to them, you count all the number of units. 2 plus 3 is 5, plus 5 is 10. You divide by 10, multiplied by how many did A bring? A bring 3 units. So that is the cost you apportion to it. B brings 2 units. That's the cost you apportion to it. C brings 5 units. So it means that all the units are having the same joint cost per unit. Another way is, we call it the sale value at split off point basis. Sales value at split off points basis. So the common costs are apportioned on the basis of the sales value of the joint product produced at the point where they are separated in the process. So the sales value is the sales value that is being used. So what it means is that, what is the sale value of each of the products? So that is what is being used, not the number of units. So what is the sales value of A, sales value of B, sales value of C? So you add all their sales value together, and you now say the sales value of A divided by the total sales value of ABC multiplied by the common cost will give you the cost to apportion. Then there's what they call the net realizable value. Sales value less further processing cost basis. So let's see an example here. 2 joint products, which is JP1 and JP2, are produced from a common process. So There's a common process that when it split off, it will produce J1 and J2. Okay, during March, 8,000 units of materials were input to the process. So it means that before they were split off, the material, let's look at it like crude oil. The crude oil like is 8,000 units. And let's look at J1 and JP1 and JP2 as kerosene and diesel. Or let's say, yeah, fuel and kerosene. Now, the total cost of processing, which is the direct material and conversion cost, is 135,880. So you put in 8,000 units and material cost is inside this 135,880 and the cost of processing it to the point of split off. Now the output that you got when you splitted them off was 5,000 units of JP1 and 3,000 units of JP2. So the 8,000 units was splitted off and separated into 5,000 of this one, 8,000 of the other. Now JP1 has a sales value of 40 naira per unit when it is output from the process and can be sold for 120 per unit after further processing cost of 25 naira per unit. JP2 has a sales value of 55 naira per unit when it is output from the process and can be sold for 80 naira per unit after further processing cost of 15 naira. Now look at the ways in which the joint cost can be apportioned. We said before we can use the unit basis. So the unit basis here, how many was the unit for J1 is 5,000, J2 is 3,000. So you add them together is 8,000. What is the common cost here? Is 135,880. That is the common cost. So how do you apportion it? You say for JP1, 5,000 divided by the total multiplied by 13,580, 135,880. The same thing for JP2, you use 3,000 divided by 8 multiplied by the cost. So do it this way, you have apportioned it. Now, they said this would have been recorded in the process account as follows. Direct material, 8,000 units. Look at the whole cost here. Because we are not told how much that is direct material alone and how much is conversion. You see that there is no conversion under here. You can as well write direct material and conversion. You put 8,000 units and this figure. Now JP1 is having its own figure. You can see JP1's figure and JP2 figure. So that is how it's going to look like. Now, if you decide to use the split off method, sales value at split off. The second one, the 5,000 units, how much sales value does it have? It has a sales value of 40, the other one has a sales value of 55. So that is what we are using. Sales value, 5,000 units at 44 naira, 3,000 units at 55 naira. Look at their sales value. So what do? We total their sales value. So what is the cost we want to apportion? 135,380. So you say this sales value for JP divided by the total sales value multiplied by the cost you want to apportion. The same thing with the other one. And when you are recording it, you'll be using the sales value method. So look at the cost apportion now. So you see, when you apportion cost with sales value, it is different from when you apportion cost with unit cost. So you see the process costing is different. Now let's look at net realizable value. We are told before that 5,000 units would have been sold for 120 naira. That is how much it is going to be sold when you finish processing, after you have incurred a processing cost of 25 naira. So 120 minus 25, this one is 80 minus 15. When you minus, you multiply, you get these answers. And when you add them, you get this. So you use the same method, this 475 divided by 670. So at the end, you find out that the valuating here for the costs are different for the three methods. So if the examiner is silent on which method, then you take which method you want to. In the exam, you might be asked an objective question. Wow. You say, I've been on mute since. Wow. I'm not mute now. I am not mute. Wow. I am not. Ah, I've been talking since and I've not been on mute. I can see myself being not on mute. I am on mute. Okay. Oh, okay. Your video. Sorry. Okay. So let me continue. We have no issue. That's good. So we find out that the process costing varies here. The process accounts vary in valuation. So whichever method you use, it is going to give you a different answer. So in the OBJ, they might ask you, using so and so method, what is the value of JP1 or JP2? So make sure you know how to do each of the method. They might tell you this question is for question 5, 6, 7. And they might just decide to use joint costs and just ask you based on this method, based on that method, based on that method. So know it because they might bring it as objective. Now, byproducts. Now we are saying joint products and byproducts. So what is byproducts? When two or more different products are produced. When two or more different products are produced, any product that does not have a substantial sales value is a byproduct. So if something that does not have a substantial sales value is a byproduct. Byproducts are output from joint process that are relatively minor in quantity and in value. So you see, it is different from joint products where both of them are substantially equal. So none of them is taking a majority seat. All of them are major joint products. For byproducts, one of them is dominant, the other one is recessive. The other one does not have much value. A byproduct has a small value relative to the joint product, but it may have some value. The sales proceed of the byproduct can be treated in a number of ways, and the method choosing has an implication for how the product is measured in the joint account. Since a byproduct does not have a substantial value, there is no sense in charging it with a share of the common processing costs. Instead, the sales value of the byproduct is usually deducted from the common processing cost, just as we do for normal loss. So it means that when there is a common product and there is a common cost, just get the sales value of the byproduct and divide it and minus it from the common cost. The remainder is to be given to the majority. If there are joint products, the common costs are apportioned after deleting the sales value of the byproduct from the total of the process. So if there are 3 products and one of them is minor and 2 is major, the minor one will just be, the sales value will just be deducted and the remainder will be apportioned normally with the normal 3 ways we used in apportioning it. So look at the example of buy and joint products. This is the same example we give, but we are now going to add one thing now. Output was 5,000. Okay, now they said 9,000. The new thing was 9,000 units of materials were produced. Fine. Now output was 5,000 units of JP1, 3,000 of JP2, and 1,000 units of BP3, byproduct 3. Now, JP1 has a sales value of 40 as before. The other one has, and it can be sold for 120 after a processing cost of 25 as before. JP has the same things as before, but now the thing of interest is the BP has a sales value of a substantial small amount. See why it is called the byproduct, 1.58 per unit. The company's policy is to treat the proceeds of sale of a byproduct as a reduction of joint process cost. That is the main thing to do. Apportion the process cost between the joint products on the basis of net realizable value at split off. They told us the method to use. What is the net realizable value? What we will do is look at the common costs. The total process costs is 135,880, we are told. Now, what is the value of the byproduct? We are told that 1,000 units of byproduct was made. Look at the selling value. So 1,580 will be deducted from this by total process cost to give you this other one. So this is the joint cost here that will be shared. So if you look at this cost, you can see it here. Now, how is it going to be shared? They gave us the method, net realizable value at split off. So 5,000 units was produced. This one was 3,000 units were produced. What is the net realizable value? You can sell this one at 120 after making a further processing of 25 like we did before. Sell this one at 80 after a processing of 25. So what we do, you multiply, you get your figure. These were the figures we had before. So all we will now do is this figure divided by this last figure, multiplied by what you are trying to share. Of course, we have now a different figure. Okay, so that is how we do it. So what we will do now is you bring your direct material here. This is the same figure we have here, and you will now see the 3 products here. The byproduct having this value, this one, look at its units, the value attached to it, the cost attached to it. All right. We'll look at another example here. 2 joint products, X and YY, are produced from a common process. During July, 11,000 units of material were input in the process. So we have 11,000 inputs. Total cost of that input, direct material and conversion, was 100,000. Now, output was as follows: 6,000 of XX, 4,000 of YY, and 1,000 of a byproduct Q. And we are now told that XX has a sales value of 24 per unit when it is output from the process. This one has 12 naira, and this one has 1 naira sales value. So you see, the company's policy is to apportion the joint cost on the basis of sales value at split off. So before we use net realizable, now we want to use sales value at split off. You know, you can still use units, unit basis, but this one says sales value. The proceeds of this byproduct could be treated in one of the following ways. Now, look at the sales value at split off. For X, 6,000 of course, Y is 4,000, and look at their sales value, 24 and 12. So this 2 is the cost that we need. So what do we do? You know, you have to deduct the sales value of of Q from this 100,000. So if this one has a 1 naira per unit value and it was 1,000 units, so it's going to be 1,000 naira. So we are going to say 100,000 minus 1,000. Of course, it's going to be 99,000. So that is what it is here. This is the 99,000. This is the 99,000 naira. So you are saying this figure divided by the total is the same thing now. So we look at it here as material 111,000 at 100,000, byproducts, which is the Q, XX, and YY. They give us the values that we have them to be. And look at the income statement. Look at how the income statement will look like. Revenue, the major one. Okay, where do we get the 80%? They said the company's policy is to apportion joint cost on sales value at split of 80% of the outputs were sold at the end of the month. So they didn't sell everything. They sold 80%. So 80% of this 6,000, which is going to be like 4,000. Is it? Okay. 4,800. So if you sell it at 24 naira, this is what you're going to sell at the end of the month. For Y, 3,200 units we are sold at 12 naira. This is what you're going to get. You add them. This is your cost of sales. What will your cost of sales be? Your production cost, which is 99 naira. You know, we have deducted the sales value of the byproducts. So it is 99 naira for these two of them. Production cost. Closing inventories, 20% times 99 naira, because we didn't sell 20% of it. So we are valuing them at the way we value the full production cost. So we have using our, when you remember the absorption costing method, we said that in absorption costing, it is used for the closing units are valued the same way as the production. Sorry, we said we use absorption costing for valuation of closing stock. And now look at the closing stock here now. What you produce, 99%, 99,000. This is 100% production cost, 99,000. If you go to here, you find out that this is the 99,000. Remember, we're not putting the byproducts. So the 99,000, we are saying that we've sold 80% has been sold. 20% is remaining. That is why we are using 20% times 99,000. So this is your closing stock. When you less it, this is your cost of sale. So what do? This is your gross sales minus your cost of sales. You are getting your profit here. So you see your byproduct is not in it, in this part here. Now, the second way here, sales product as split off point, treating sales proceed of byproduct as other income. So that's another way. So look at this one here. 6,000 units at 24 naira, 4,000 units at 12 naira, give us 192. So what we now did here was this: byproduct deducted from the gross cost. So what we now do is that 144 divided by 192 here, as we got here, times your 100,000. This 100,000 here includes the sales, the byproduct. The byproduct is included here. The same thing, you get 75 and 25. Unlike when we did it here, we are getting 74,250 and 24,750. So when we do it, what we will now do here is process costing. This left-hand side will be the same as usual, but we find out that the byproduct has no value. So you see, everything was included here. So byproduct has no value. Unlike before, when we have 1,000 naira here. Here it has no value. So everything was apportioned to the X and the Y. So you see the ways we did it. Either we give the byproduct some value. If you give it value, that means you use 99. If you don't give it value, you use 100. And look at the statement of income. Look at the statement of income will be: we sold 80% at this amount, 80% at this amount. Fine, the same thing as usual. Now look at our cost of sales. Now, instead of 99, we are using 100. That's the difference. Now your closing stock is now 20% of this 100. Remember, the other time was 20% of 99 because we removed the what do they call it? The byproduct, but now we are including it. But we're not including it in our main revenue. Now, when we close the closing stock is 80. When we now say this is our gross income, or this gross income minus your cost of sales, 80,000, giving you a gross profit of 73,600. Then we will now say other income. So that is where we are now including it. Why are we including it? Because we have used 100 here. So we must include it. But if we are excluding it, here will be 99. But because we have included it in the production cost, we have to include it as other income. We add it, it becomes 74,600. The profit in the above example is higher than the profit in the first one by 200. So that one was 74,400. This one is 74,600. This is because the whole sales proceed from the sale of the byproduct has been recognized as other income. Now, when the sales proceed from the sales of the byproduct are deducted from the joint costs, part of that deduction is carried forward to the next period in the valuation of the closing stock. The deduction in joint process costs was 1,000 naira. And you see 80% of the inventory to which it relates has been sold, leaving only 20% remaining, which is the 200 to be carried forward next period. You see, that is why this one was 200 naira higher than the other. And it's going to be, the 200 naira is going to be carried forward to the next period. So this process costing has been a very, very, very tough topic. This is one of the most important topic in MI. And I repeat, this process costing cannot be escaped. You will see it in the objective, this is in objective. Then you come to the, okay, when I say objective, you see it in either at least 2 places in the multiple choice question, 1 place in the short answer question. That's why I said 3 places. Then when you go to the main answer, the essay, you may also see it in 1 question, a full question. So make sure you find a way to get to know it. Look at those formats, and if you have any question, come back to me. Thank you so much. Our time is well spent. No time for review. Have a nice day.